Filing U.S. taxes from abroad? To avoid mistakes and penalties, do you need a CPA that specializes in working with international clients? My name is John Pastor, co-founder of Nonresident Investor, a full-cycle company that helps foreign investors with U.S. tax filings, purchasing real estate in the States, and we offer US LLC formation services. Today, I want to talk about the taxation of foreign-owned LLCs in the US. We're going to cover everything that you need to know about this subject. First, I'm going to tell you how to figure out if you actually owe taxes in the US. Most of our clients want to know this, so we figured it'd be best to start there. Then, I'm going to share with you some information about different US tax forms for non-residents. And lastly, we're going to put a table at the end of the video that summarizes everything we're going to cover today. Make sure to stay tuned for all that. But before you do anything, do not forget to like, share, and subscribe to our channel. It'll really help us reach more international people interested in learning about US tax laws and LLCs, offshore tax planning, US mortgages, real estate, and more. Let's get started. The primary factor that determines whether you owe taxes in the US is the type of income your LLC generates. To make things simple to understand, we'll just say that there are two types of income that a foreign-owned US LLC can generate. There are US source income and foreign source income. US source income is taxable, meaning that if your LLC generates US source income, you'll have to pay taxes on it. On the other hand, if you're a non-resident and your LLC only has foreign source income, you do not have to pay taxes on that income in America. Now, the main question is, how do you figure out what type of income your US LLC generates? Let's dive into that. First things first, if you're a US citizen or a green card holder, all income your LLC generates will be considered US sourced. Second, fixed or determinable annual or periodical income, also known as fdap, is always considered US source income, and it is taxed accordingly. Some examples of it include interest income from loans, savings accounts, bonds, and other interest-bearing instruments that come from the US. Most payments made by US corporations to shareholders are considered US source income and fdap. Essentially, income from interest is fixed determinable annual periodical income. Another type of fdap is dividends. Then, we have rental income or income from renting a US property. This type of income is always US source and can, depending on your LLC structure, be either fdap or effectively connected income, also known as ECI. We'll talk about ECI in a minute. For now, let's move on to other examples. Some US pension plans or annuities can be classified as fdap income, which makes them taxable. And lastly, we have royalty income. These are basically payments from using intellectual property like patents, copyrights, and trademarks. All of those are fdap and are taxable under US laws. Now, keep in mind that there are other examples of fdap and that the ones we talked about are the most common ones. If you're unsure about what type of income you have, we advise you get in touch with a CPA who has experience dealing with international clients. This is extremely important, as 99% of regular accountants in the US have absolutely no idea what to do with foreign clients. So many things are different, including the laws and tax forms, and it's best to find an accountant who has experience with international clients. And it just so happens that in our team, we have a CPA with 30 years of experience dealing with foreign business owners. So, if you need any help with US taxes or figuring out what type of income you have, book a free exploratory call, and we'll figure it out together. We'll leave the link in the description. The third thing to keep in mind is effectively connected income, or ECI, which is always US sourced and therefore taxable. ECI can be defined as any type of income from a trade or business actively performed in the United States. It can range from 10% to 37% for individuals based on income level and is fixed at 21% for corporations. Some examples of ECI include profits from selling goods or services directly in the US. For example, if a foreign company operates a retail store in the US, it generates ECI from all sales. Because ECI is always US source income, it's taxable under US laws. Next up, rental income. Renting a real estate property that is physically located in the US can sometimes generate ECI and other times fdap. Whatever the case, both will always be considered US source income, so you have to pay taxes on it. Another example of ECI is income from services performed while physically in the US. Essentially, this means that if you provide any services while in the US, income from those will be ECI and also US source income, meaning it will be taxable. The fourth thing that's extremely important when figuring out what type of income your LLC generates is the substantial presence test. This test determines whether the IRS considers a foreigner a US resident or non-resident alien for tax purposes. If a foreigner is considered a US resident alien, then the income from any LLCs they own can automatically become US source income, and they'll have to pay taxes on it. Also, as resident aliens, they'll have to pay taxes on their worldwide income, which can further complicate things. On the other hand, if a foreigner is considered a non-resident alien and doesn't have any US source income, they won't have to pay US taxes. And in the case that they do have US source income, they'll only be taxed on that instead of their worldwide income, which is the case with resident aliens. To put it simply, try to avoid becoming a resident alien unless you're planning on permanently moving to the US. To be considered as a US resident alien and technically become a US taxpayer, you have to be physically present on US soil for a minimum of 183 days in the current year or 183 days during the past 3 years. Note that the days for each year are counted differently. For the current year, 1 day equals 1 day. For the previous year, 1 day equals a third of a day. And for the 2 years before, 1 day equals 1/6 of a day. If this seems too complicated to understand, you can check out NRI's SPT calculator. We'll have a link to it in the description. I hope this helps you understand what types of income your LLC generates. And if you have any questions or need additional help, you can book a free call with us, and we'll go from there. Now, let's move on and talk about what types of tax forms you need to file based on the type of business entity and income. If you own a single member LLC in the US as a foreigner and do not have any US source income, you do not have to pay taxes in the States. A good example of companies that do not generate US source income are online businesses that operate outside the US. Like a company that provides IT services to clients around the world, but the person providing services is not physically located in the US. In that case, the income is foreign sourced, and the company doesn't have to pay US taxes, even though it's registered in the States. However, what you still have to do is file the 5472 informational tax return, along with Pro Forma 1120. These forms are used from the IRS to track the finances of foreign-owned LLCs and prevent tax fraud. When filing it, you do not have to pay anything. But if you don't do it on time, you can get a $25,000 penalty. Now, if your single member LLC has a US source income, apart from the 5472 form, you'll also have to file either the 1040 or 1040 NR tax return. Which one you file will depend on your legal and resident status and SPT score. Apart from filing one of these forms, you'll also have to pay US taxes because you have US source income. I know we've already said this a bunch of times during this video, but you will be surprised how many people get it wrong and make silly mistakes that end up costing them a lot. Anyway, if you do not file the forms on time, you can get penalties reaching up to 50% of unpaid taxes. The due date for the 1040 and 5472 forms is April 15th. If you miss that date, don't worry, but you do need to file for an extension, which moves the deadline up to October. Foreign-owned multi-member LLCs, as the name suggests, have more than one owner, of which at least one is a foreigner. If you own this type of business, the first form you have to file is the 1065 Schedule K1 form. This is technically not a tax form, but rather an information form, similar to 5472. It provides an overview of the income, deductions, gains, and losses of a foreign-owned multi-member LLC. Why is it not a tax form? Because each of the owners will eventually have to pay taxes via their individual 1040 or 1040 NR tax form. How much they'll pay will be based on the percentage of ownership in the company and the type of income. Failing to file the 1065 form on time can lead to $210 per month fine for each partner in the business. The due date for this form is March 17th. If you think you'll miss the timeline, you need to file an extension before the initial due date, which will move the deadline to September. Now, I remember distinctly that we promised you a table that summarizes most of what we talked about. So here's that table now. Feel free to pause the video to review it. Thank you for watching. To support us in our work, please leave a like, share, and subscribe to our channel. If you have any suggestions on how we can make this whole operation better or have a subject that you want us to cover, we'd love to hear from you. Share your thoughts in the comments below. Once again, thank you for watching, and see you in the next video right here at the Non-Resident Investor channel.